Hi everyone. Hello. Alright, today's a very special episode because we are on the part where we are doing equilibrium. Now that is very interesting. Interesting word to understand. Equilibrium. Now what the fuck that means, who the fuck knows? We're about to find out. By the way, I just want to I'm just gonna, guys, whoa. Okay, look at this shit. Okay, first of all, this bitch is gonna stop lagging. Whoa. Ta gueule. Cette affaire-là. On me casse la tête avec ça, toi, mon sacrement. Alright. Beautiful people, we are here. At this very moment, yesterday, we took... Well, it was a very small video because I had to go pick up my girlfriend because she was stuck in the washing machine. Alright, so here... Whoa. I decided to go long, but for some reason the position closed here, which I don't understand why. Let's go to history. Wait, what? I fill an order here? I sold here. Okay. Oh, okay. Cancelled. Why was it cancelled? Because first of all, I was not stopped out. And I was in the right direction. But why did it close by itself? Who the fuck knows? But the important thing is that I was in the right direction. Now that is a W. Alright, so we had overconfidence to listen to. Y'all can see I'm fucking magically beautiful right now. Well, I'm wearing Nike Tech. Ouais. Oh la trace de sément, frère. I think my light's a little bit too stories are made, trades are made, pussies being made. Alright, whoa. I am in the right direction, but yet again, something fucks up. Wait, let's just go do something real quick. Let's just real quick. Just go do something real quick. Yeah, I know I'm not trading on that. What the fuck is this? Yes, okay. Okay, let's say I take a trade here. Totally dumb. I'm just gonna go off of liquidity here. Like, I'm not using anything. What's I want to buy? I want to buy you 1 unit. Let's add a stop loss to 107,632. Okay, 633. Take profit 75. What the fuck is that? Let's go to example. Let's go off of to liquidity right here. Six, 8, 2. Six, 8, 2. $6.18. Let's buy 5 units. Okay, but when does it stop? What is this? Reverse position? Okay. Protect position. Close position. Okay. Okay, well, I'm basically just going off of liquidity right here, but let's say I just want... Okay, let's actually do something not dumb here. I'm just gonna go grab a rectangle. Wait, there's no point doing that. I'm already in the live trade. I'm going to live liquidity right here. Yeah, let's see if it cancels. Because there's no, like, fill leverage. 500. I have 501 of leverage. Whoa. Okay. I'm on a 1 minute time frame though, that's just dumb. Wait, that genuinely looks like a bad trade though. Well, I'm just going off of just liquidity. Is there an imbalance somewhere? What the fuck is that? What is that right here? No emotion. No emotion. Oh, wait. What? What? Why did it hit? Oh, it hit. I'm the best fucking trader ever, bro. Alright. Lock in.
Say, where's the boot camp video? Come here. Come here. Come here.
Wait, what the fuck did I just get into?
I know what you're gonna say. I know what you're gonna say. Where's the boot camp video? Come here. Come here. Come here. That's what I'm doing to your cum. To your children that aren't even birthed yet. You know why? Because you can't find a little egg to nestle them into. You know why? Because you get negative babies. I know what you're gonna say. Where were you? First of all, sorry. I know what you're gonna say. I know what you're going to say. Where were you? The boot camp video. Shut up! Shut up! Oh, shit. Shut your mouth.
Négociez en toute confiance sur notre plateforme de placement facile à utiliser. Utilisez nos outils d'analyse pour comparer, personnaliser et faire le suivi de votre rendement. Commencez à négocier en toute confiance avec placement autogéré de BMO.
Sorry, I had to respond.
Yeah, you can imagine I'm kissing your ball sack.
Holy
Shut
fuck.
Ah! My hand.
This guy, bro. Wait, so I... Wait a minute, I want to see that trade, bro. Buy, stop loss. Cancelled, sell, filled, take profit. Wow. Let's take another one. Why is it bugging, bro? I was going gold. No. When you see shit like this, you don't trade, but just go in like another time frame. Wow, gold is so weird. If you trade gold, you're weird. You're a weird fucking guy, I'm not gonna lie. Alright. There. We can see your face better. Okay, so we have a break of structure to the upside. Break of structure. Boom. Fall. Just kidding. Don't trade like this. Okay. What the fuck is that? By the way, it just hit liquidity, so go to a 5-minute time frame. Okay. Let me analyze the shit out of this. Poop. You have a poop stain right here. Okay. Yeah. Not gonna lie, that looks a lot like it's about to fall. I don't know why. I'm looking at this and I just feel like it's gonna fall. Because they're just filling orders here in the fair value gap, but it hasn't even tipped over it. So yeah. Oh, we have another fair value gap here. Oh my fucking god, what am I seeing here? Another fair value gap. Ooh. Once it hits liquidity, I'm entering. Okay, buddy. You're fucked. You're fucked. You're fucked in the ass. Here. Just mark out something real quick, baby girl. Upside. Broke liquidity also. Upside. Broke structure. Downtrend. We are in a fuck trend. Broke structure also. Price is consolidating, but this is why we're using a fair value gap for the retracement. Also, that one we're gonna put orange. That's the Nordic block. Mark out liquidities. Whoa. We're on a 5-minute time chart, so wait a minute. If I'm gonna mark out liquidities, I'm just gonna go in a higher time chart. Let's go back to the 5 minutes. What are we doing here? What are we doing here? We are entering the order block. If it goes above the fair value gap, I might go long. Let's just see what happens with the retracement. I'm just playing around. I'm just playing around with the charts right now. Like how to take entry or whatever the fuck. Like what is a tick? What are ticks per se? No, no, no. Oh, you can schedule a buy? That's a cheat. That's a cheat fucking code. Oh, wait. They don't love you like I fucking love you. It just broke. Wait, let's see how market reacts to this. Because I might just switch positions right here. Because in the order block, it's always like a retracement where they just want to get their orders filled and then come back down. Because technically, we still haven't broke the fair value gap from the upside, so... Okay. Because we have an order block. Yeah, but the problem is, I'm just gonna get stopped out. I just don't understand. No, not stopped out, but like the trade is just gonna cancel itself after an amount of time. But why are my positions getting canceled? That's just what I don't get. Alright, I entered a position here off of just because I feel a lot like this is filling into the order block. Here we have an order block here because here it broke. Here it broke structure, and that leg up here is what caused the break of structure. So from there to there, you basically just take the low and the high of the order block, and you can see here there's little transactions here being made to fill orders. There's also a fair value gap here. It got out of it. Here we have another one. It got out of it, entered a new one, then got out of the new one and re-entered the old one. Well, yet again, here we also have a break of structure right here. Oh no, we're still learning here, but I feel like that's still a pretty good entry. I put in my stop loss on 2 liquidities. I chose this one and this one. I don't know, we'll see.
Shut up.
Okay.
I'm working hard over here, bro. Guess what? I get back from Miami, I pick up Boogie, ruins my bed, jumps on there, fucking... And I have to slap his ass for him to calm down and get horny. Like, God, man. And then, well, this is the fun part, and this is why it took so long for me to post this thing. Dude, okay, so I'm starting a new business. Odds that you guys will be affiliated with it, really low. You guys will know what it is. But we're dealing with more high caliber like, I don't know how to say this correctly without getting you guys offended. We're dealing with big money. And my business partner came over, and if we're being honest, we just kind of got carried away. We were talking for 4 hours straight, and I couldn't film because we were working on something that was important. And guess what? This video is still going to be posted. You're still going to watch it, and you're still gonna suck my dick. Okay?
I knew he was gonna say that.
So, with that being said, let's get active. Okay? Let's get active. Also, I don't know, I'm so fucking wired, bruh, and it's like 10 p.m. I need to pop another one of these CBD gummies and like melatonin so I can just, you know? But anyways, let's get started. Today's the equilibrium video. You're probably wondering, shut up. Shut up. Shut up before I shut up. Guess what? You're gonna learn some shit. Pull out your notebooks and pull out your cocks, because today's gonna be a great day. Guess what? If we're being honest, today is kind of gonna be ass. Sorry. I don't know why I'm just perkied up right now. Probably because I took a perk 30, a perk 10, a perk 20, a perk 15. I already know all the TikToks. Miami changed TJR. TJR's a drug addict. See me off drugs. You don't want to see me on. No. I'm being dead ass. Literally imagine me on drugs, bro. If you're a woman, please hit me up. Please DM me. Okay, so let's start. Let's get going, bro. Let's actually get you guys. It's been 4 minutes already, dude. And we've just been jacking off the entire time. Are you finished yet? Dude, I hate when you guys comment like, keep going, I almost finished. Like, what are you gonna do? Jack off to me like what? You're weirdo. Anyways, let's get started. Okay, today we're talking about equilibrium, and it's gonna be relatively short because this is like the explanation video. So pull out your pens and papers and let's get started. All right.
Wait. I want to see if it's going to stop at any point.
So, what's equilibrium? Equilibrium is essentially a Are we done? I think we're done. Okay, so equilibrium is essentially a retracement tool to literally show you where big money is likely to buy again. That's all it is, okay? Equilibrium is finding the premium, right? If we're thinking about this logically, right? You go into the grocery store and you see a bag of Doritos and it says, guess what, dipshit? It's gonna be an extra $5 this time. And you're like, dog, I'd rather pay the regular price or get one that's on sale. Banks are thinking the same shit when it comes to the market and the price. Okay, so if they're looking to long, they want a cheaper price. If they're looking to short, they want a higher price, right? Pretty simple shit, and that's all equilibrium is. That's all equilibrium allows us to measure. So with equilibrium, it's hard to show while I'm explaining it, but essentially, we're able to measure from the high to a low or the low to a high to measure the premium and the discount. And essentially all it is measuring literally the high from the low and finding the 50% mark, right? So if we're going from a high to a low and we're in a downtrend, right? So we're in a downtrend and we have our highs and we have our high and our low right here, and equilibrium is right here. When price gets up to equilibrium above that 50% mark of the distance from the high to the low, that is considered a discount to go short. Why? Because it's at a high price. Right, it's above the pretty much like break even price. It's above the 50% mark, meaning it's at a discount for people to go short. It's a good price to go short. It's on sale. It's literally all equilibrium is. Like I said, today's going to be a pretty fucking easy day. Equilibrium is one of the easiest concepts. That's why we saved it for last. That's why I did liquidity first. That's why I did, fair value gaps. Or fair value gap second, because like most of the time those people end up confusing those the most, and then order cocks and then equilibrium. So yeah, equilibrium is literally just finding the premium and the discount of a swing high to a swing low, or a swing low to a swing high. So in the opposite situation, right, we have a low and we have a high. If we're in an uptrend and we find that 50% mark, right, as price starts to retrace down from that high coming down to the low, and we're in an uptrend already, right, we're finding equilibrium, which is right here, and anything below that 50% mark from the swing low to the swing high is going to be a discount for these big banks, for these market movers to end up placing more orders, right? And I like to use equilibrium not necessarily as an entry point, but I like to use it as kind of like a gauge of like, okay, this is an area where people would like to buy. This price range is where people would like to buy. Now let me find more of a reason to get in, whether that's an order cock, whether that's a fair value gap, whether that's even just a break of structure. But I like to use it as kind of like a gauge of like, okay, this is an area where people would like to buy. This price range is where people would like to buy. Now let me find more of a reason to get in, whether that's an order cock, whether that's a fair value gap, whether that's even just a break of structure while in a discount. That's enough reason for me to get in. Now, I'm not the type of person to enter purely off equilibrium, and we'll show a bunch of examples of that in 2 days when we go over it on the chart. But that's really essentially what equilibrium is. It's entering and finding the sale price, the discounted price to enter again for a retracement. So again, right, let's go over our tools that we have: liquidity sweep is essentially the inducement. The break of structure is our first primary entry, right? Liquidity sweep, break of structure, that's an entry point. You miss that, you have your first retracement entry point, which is an order block, right? What's the order block? The actual move that causes the liquidity sweep.
Okay, we're back. Okay, we're back. Wait, the order block is actually this.
Of structure while in a discount, that's enough reason for me to get in. Now, I'm not the type of person to enter purely off equilibrium, and we'll show a bunch of examples of that in 2 days when we go over it on the chart. But that's really essentially what equilibrium is. It's entering and finding the sale price, the discounted price to enter again for a retracement. So again, right, let's go over our tools that we have. Liquidity sweep is essentially the inducement. The break of structure is our first primary entry, right? Liquidity sweep, break of structure, that's an entry point. You miss that, you have your first retracement entry point, which is an order block, right? What's the order block? The actual move that causes the liquidity sweep, right? If you see liquidity sweep, break of structure, tap into an order block, reaction off of it, or even just like hitting the order block, enter off that, right? Boom. We already have liquidity sweep. What? Your first retracement entry point, which is an order block, right? What's the order block? The actual move that causes the liquidity sweep, right? If you see liquidity sweep, break of structure, tap into an order block, reaction off of it, or even just like hitting the order block, enter off that, right? Boom. We already have an order block, reaction off of it, or even just like hitting the order block, enter off that, right? Boom. Block the actual move that causes the liquidity sweep, right? If you see liquidity sweep, break of structure, tap into an order block, reaction off of it, or even just like hitting the order block, enter off that, right? Boom. We already have liquidity sweep, break of structure. That's already telling us market structure shift. Perfect. We can get in. Okay. If we miss the liquidity sweep, break of structure, perfect. What else do we have? Now we have fair value gap, which is a retracement tool.
Wait,
right?
so what I did is absolutely fucking insane and dumb. Because, for the fucking reason that, we have an order block here. We have a fair value gap here. Wait, let me just enter off the tick here. So that really is the order block. Wait. So the smart thing would be to put it like here. Okay, if we're gonna do a short trade, okay.
An imbalance, and then we see a reaction off of it. Boom, perfect, enter. Now we also have equilibrium, which we can pair together with a fair value gap, which is honestly the perfect tools to combine for a fucking retracement, right? If you can find a fair value gap that's within a discounted price, and then you get a reaction, bling, blow, boom, let's enter, right? Makes sense. That's all equilibrium is. It's just discount, and it's hard to kind of show. I mean, I tried to do it with my hands, but you'll understand a lot more about it. I mean, this is just, again, these first little parts of these building block series are relatively easy because I can just explain it to you guys. And thank God I'm finally back in Puerto Rico. I can grind out all these damn videos for you guys. But yeah, that's essentially what this shit is. And I don't really have anything much else to say about it. It's literally just on sale. So in 2 days we can go over it on the chart and cover this. But hopefully you have it written down. What is equilibrium? It's the pretty much the price range where you can find a discount for a re-entry. That's all it is. It's the price. It's a discount for banks and market movers to find re-entry because it's on sale. It's a good price to enter. And on the contrary, right, they wouldn't want to enter within a premium within the market because, right, it's expensive. No one wants to buy a $10 bag of Doritos. They would rather buy a $3 bag, right? If the regular price is like $5, they wouldn't want to buy it for 10. They would rather buy it for like 3 or 2. You know what I'm saying? So yeah, that's pretty much it today. If you guys, this is another thing. If you guys want to join the Discord, it is going live on Sunday. Okay, and it will only be open for a week. So everybody that's been in my fucking comments asking me about where is the Discord, where is this, where is that? I know it's closed. I know. I did it for a reason. Okay, I closed it. All right, and I didn't talk about it. And it's right about that time for it to be open for 1 fucking week, okay? And I don't even want, dog, I don't even want to see the storm that comes with this, bro, but I guess we'll see. But anyways, if you want to trade with me, trade live, see how we use these building blocks together to find entries, pair it along with your learning in the boot camp. I honestly think that, like, there's a reason why this is the only thing that I charge for. Call me a fucking sellout. I'm for it to be open for 1 fucking right, they wouldn't want to enter within a premium within the market because, right, it's expensive. No one wants to buy a $10 bag of Doritos. They would rather buy a $3 bag, right? If the regular price is like $5, they wouldn't want to buy it for 10. They would rather buy it for like 3 or 2. You know what I'm saying? So yeah, that's pretty much it today. If you guys, this is another thing. If you guys want to join the Discord, it is going live on Sunday. Okay, and it will only be open for a week. So everybody that's been in my fucking comments asking me about where is the Discord, where is this, where is that? I know it's closed. I know. I did it for a reason. Okay, I closed it. All right, and I didn't talk about it. And it's right about that time for it to be open for 1 fucking week, okay? And I don't even want, Dog, I don't even want to see the storm that comes with this, bro, but I guess we'll see. But anyways, if you want to trade with me, trade live, see how we use these building blocks together to find entries, pair it along with your learning in the boot camp. I honestly think that, like, there's a reason why this is the only thing that I charge for. Call me a fucking sellout. I'm not giving away my 5 years worth of trading knowledge and information for free. That's something that I'm definitely going to charge for if I even give it out. So yeah.
Liquidity sweep. You bunch of morons. Yeah, I'm gonna lose this trade, I'm pretty sure. By the way, the video's finished. Equilibrium basically. Trying to find something I can draw as an equilibrium. Yeah, I'm gonna lose this trade. Why am I not getting stopped out? Whoa! Laggy. Liquidity sweep yet again. Yeah, I should have went short because something that TJR literally just explained and I totally just forgot is that when you have because here I had a brick of structure and that leg up, you can see they were filling orders. It was almost immediately normal that I was gonna lose this trade. Yeah, I should have went short. Although it did liquidity here, the liquidity sweep here. Depending on how this candle ends, it will pretty much confirm if I will have a chance or immediately lose. Because if it were to end like this would genuinely mean that sellers are very weak right now, because you can see they did all of this, but they're being pulled back by the buyers right now. But as I said, there's a liquidity sweep here. The fair value gap, I don't know, it's weird right now. I gotta rewatch fair value gaps and order blocks. That's for sure gonna be for the next study session. Stop loss executed on. Yeah, so I lost. Okay. But I don't understand. It ended here. I'm gonna explain you guys my mistake. We have a fair value gap here. Alright. We have an order block right here prior to the liquidity here. Sweep. Focus, motherfucker. We also have another order block right here. I think long term I would have won that trade. Like initially, like I put it like the stop loss here. Well, my win whatever here, and my stop loss I put it here. That would have been a fucking great trade to take, but I just wanted to see, confirm, and study certain things. Because here, this is confusing me a lot, right? I lost the trade. What do you have to say?
I think this is like a great hand in hand if you already kind of have like, on the most recent trade that we took. Why didn't TJR fucking enter off the break of structure? Bad risk reward. What did he want to wait for? One of our re-entry tools. He wanted to wait for our order block. And then also during that time, I was like, yeah, if it hits the fair value gap and then gives us a reaction off of it, I'll enter off that. But if it hits the order block, I'm instantly entering when that price point gets hit. Risk reward. What did he want to wait for? One of our re-entry tools. He wanted to wait for our order block. And then also during that time, I was like, yeah, if it hits the fair value gap and then gives us a reaction off of it, I'll enter off that. But if it hits the order block, I'm instantly entering when that price point gets hit. That's some shit that you need to write down and take note of, bruh. That's what you're paying for. You're not paying, like, sure, yeah, make money with me. I don't give a fuck. That's like the small and hit this order block, and that's where I'll want to enter. This is what happened when on that trade on.
Looking for a Canadian regulated broker that can match your drive and ambition? Don't settle for second best.
Liquidity sweep off the feet. Break of structure on my meat. Okay. Put the tip back right up in, or sorry, we poke our head right back into this. Okay, right, we see boop, hourly, scale. Scale in here, boom, 2 shots to the dome. Okay, what do we get? Break of structure to the downside. What can we do? Target previous areas of liquidity. Liquidity here, liquidity here, liquidity here, liquidity here. This is where you guys are at now. We made some progress here, boy. Decent detail last time when we were talking about all this stuff. But, I mean, you never know. So, again, right, we have another boom. Liquidity sweep. Where's our break? Break of structure right here. Okay. We see the break of structure. We see price instantly go right back up. Where was the liquidity sweep? Where was the leg up prior to the break of structure? Boom, this whole candle right here. Okay, we see price. Boom, pop its head right up in there. Dude, it sucks doing this thing on a boom, pop its head.
Okay, wait, so let's just delete all of this. Wait. So wait, so that wasn't. Wait, fuck, I'm so dumb. Right in my fucking face, dude. Dude, it's right in your fucking face, lads. Alright, so something. Is it. Have I written down this, mate? Or am I just a cunt? I think I'm just a cunt. I did not wrote this down. What an absolute dumb cluck. Dumb dick. Wait. hate fucking drawing candles and fucking things like that. Pisses me off. Quite literally. Alright, let's go to fair value gaps. Now, this is out of the way. Let's go to fair value gaps here.
Mastering your trading landscape can be challenging. As a trader, to reach new...
You don't have to do that. It's like nobody fucking cares.
We're looking for a retracement. Okay, we see price rally all the way up in through this, past it, right? The second we push past this, no longer considering it. Okay, I no longer want it. All right, it's not of interest to me. Okay, then what else do we have in line with this imbalance right here? We have liquidity. Liquidity lying right here. Break of structure on the 4 hour along with the imbalance. This looks perfect. What does gold do? Spike up into that liquidity area. Spike up into the liquidity area. Boom. We get a break of structure on the 15 minute. That is kind of drastic all the way down here. Okay, either you can short off of this break of structure right here. Okay, target previous areas of liquidity down here. Maybe the accumulation that caused the rally up. That was from right here. Whatever you want to do. Maybe target the imbalance, the start of the imbalance right here, the 50% of the imbalance, the end of the imbalance right here. Whatever you want to do, this is just showing, right? We see the imbalance get filled. We see liquidity, again, 2 building blocks, liquidity getting taken out, imbalance getting filled, boom, market falls. Okay, you also could have scaled down to even smaller time frame, like the 5 minute. Yeah, you didn't even get a break until the same area on the 15 minute sub. Again, another example of this working. Let's find another example on a smaller time frame. Hopefully you guys are starting to piece this together, start to figure out, okay, this is how we can use this to our advantage. Okay, right here. Right, I'm literally just eyeballing this stuff, seeing whatever I see. Right here, we get a 1 hour break of structure to the upside. Let's look at the high time frame. Okay, we're bullish because we had that daily break of structure to the upside up here. Okay, we see price drag on down, fill into this accumulation that caused the rally up. All right, and we'll talk about accumulation and distribution later in this course as well. Okay, so we see a break of structure to the upside. Okay, we see price coming back down. Okay, if we go to the 4. If we go to the 4 hour, we can see, boom, we have this imbalance right within here. We see price, boom, break structure, fall back down within here. We also have 1 hour imbalance right in here. And honestly, this is the one that I would prioritize due to the fact that we can see, hey, this 1 hour wick fills all the way up to pretty much this wick. So this isn't even an imbalance. We're waiting for it to come down in here. What does price do? Come in here. What can we do? Scale down onto a lower time frame. Maybe 15 minutes since we're on the hourly. Okay, what are we waiting for? Trend shift, trend change. Okay, we do get a move here, break of structure right here. What would I ideally want? Probably for this liquidity to get taken out, right? Because as we start scaling lower and lower, we can see, okay, from here and up, that's not where the imbalance is because this wick filled the imbalance. Where's the imbalance from actually? Right here, from this wick to here, right? This is where the imbalance was. This is where we were not able to get filled. Okay, so we see here, boom, we get a break of structure, probably faking people out. And, right, if we scale down to the 1 hour, where was that? Whatever. Oh yeah, if we scale down to the 1 hour, this, boom, it's just a 1 hour candle up. We didn't get very much confirmation on this. This looks like a sort of retrace on the hourly. However, we do see, boom, doji candle, okay? What is that telling us? Okay, remember, we talked about candlesticks on literally like our second day doing this. We talked about those doji candles, talking about indecision in the market, right? We see indecision within here. Okay, we don't get a break of structure here. We don't get a break of structure here.
What the fuck? What happened? Ooh, okay. My pen literally just decomposed. Maybe I need an Apple pen, that's why. The fuck? Okay. Whatever.
We don't get a break of structure here. Boom, we finally get the break of structure right here on this candlestick, and that honestly looks like that's when the hourly broke structure as well. So, right?
Did you know that you can make between 5 and 25% on your money per month passively without predicting the market, without trading?
And it doesn't give us a good risk to reward, so we want to wait for a better trade. How can we wait for a better trade? We wait for a retracement into a fair value gap, scale down to a lower time frame, and then find a break of structure off of that, because that's confirming that okay, price is going to continue in the right direction. Make sense? Okay, let's do a couple more examples of seeing how these work. Okay, so right here on GJ, we have high time frame highs right up here, correct? Then what happens? We get a break of structure on the 15 minute. We get a sweep of liquidity, a break of structure on the 15 minute. We have multiple fair value gaps here. We have a fair value gap right here, and we also have one right up here. Again, mark out both, see how we want to find a reaction, okay? Scale down into a lower time frame. Okay, we see the 5 minute. Okay, break structure to the upside. That means, okay, cool. That means we're going to retrace on the 15 minute when we see break of structure on the 5 minute. That doesn't mean, oh, complete trend shift. That just means, all right, we'll probably be retracing on the 15 minute because the 15 minute broke structure. The 1 hour broke structure. We're showing bearish confirmation on higher time frames than the 5 minute. So this break of structure to the upside is telling me we are getting a retrace. We are retracing on the higher time frames. Okay, we see the first imbalance get filled. What happens after that? Boom, break of structure off the 5 minute. How would we enter off of that? Short position off of here, stop above these highs, right? Okay, where can we target? Previous areas of liquidity. We can target right here. We can target this accumulation within here, wherever we want, right? Liquidity all the way down here. And we get a 1 hour break for structure to the upside. Let's look at the high time frame. Okay, we're bullish. S&P 500. We then proceed to break structure on the 15 minute. Okay, and what do we get left with after this break of structure? Right, we see a big imbalance within here. We see this fair value gap. Is there a fair value gap within here? No, because this wick overlaps with this one. Is there a fair value gap within here? No, because this wick overlaps with this one. This is the only fair value gap we saw. Okay? scaling down.
Okay. Most likely, it will just be a retrace just to fill more orders in that area and then come back to where it was already going for fill. Because there's a lot of things
Where
I
is
need
market
to
open? And we'll talk about the
understand.
value that market open gives us later once we...
Let's just go to here.
From our first engagement with
For
Vincent,
fuck's sake.
within 6 months, we had the first of our 2 robots out here on our operation.
I dare you to let me build you a completely free e-commerce store preloaded with
Our liquidity voids, what our imbalance is. It's literally where there is a lack of liquidity, meaning there are no resting orders in the opposite direction of wherever price wants to go. So with that being said, right, if price comes down into that liquidity void, into that imbalance, into that fair value gap where there are no right resisting orders, and then we can place more orders, boom, market is going to move and market is going to react. Why? Because there was a lack of liquidity within that area. That gives us the opportunity and the ability to, you know, move the market. I can't, dude. I'm sorry. Messing up, but we're focused. Right here, right? And the issue that I have with this is when people execute purely off of just the fair value gap getting hit and without a reaction. Wait for a reaction, or scale down to a lower time frame, see a break of structure, see a change in market structure shift, or just a reaction like with a bullish candle or a bearish candle, whatever direction you're trying to see it go, and let that be your confirmation to enter. Okay, be very patient with these because they're all over the chart, and it's really easy to get kind of caught up in them and be like, oh, they're fair value gap here, fair value gap here. All these are going to work, and it's like, no, they aren't. Okay, not all of them are going to work, and that's why we have to wait for confirmation. That's why we have to wait to see if there's a reaction. That's why we wait to see on a smaller time frame if there's a break of structure. Make sense? Cool. I'm trying to think what else we have. I mean, today's homework, you are going, which is right here. Okay, the second candle is the imbalance. Okay, perfect. We see price rally up on in there. Scale down to the lower time frame, boom, you see break of structure, young money militia. That's how we can execute. Okay, so with that being said, get your homework done, make sure you identify these, and then also be able to identify the ones that are not even real, so you can actually get comfortable with understanding, you know, which ones are right and which ones are wrong.
Alright. I know I don't talk a a lot right now, but I'm just trying to understand a few things, right? Because I'm not the kind of person who talks while they study. Right, so we have a fair value gap right here. I'm gonna put it blue. We have a fair value gap off of an uptrend. But here we have liquidity. Here we have a break of structure. And here we have the order cock. I don't know. Prices are shitty right now. It's like literally just consolidating. I don't know. Like the next trade I would make off of that would be a little more long term, because right now the trade to be made on like example, like a 15-minute trade, or maybe just a 5-minute, like, you have no strategy here. Like, you have a fair value gap here. You can see liquidity got, whoops, here, liquidity here, liquidity here. Yeah, I don't know, it's just shitty right now. Alright, before going into
The Forex.com app. Use one swipe trading to enjoy lightning fast trading wherever you are. Offering.
Welcome. Indecision within here. Okay, we don't get a break of structure here. We don't get a break of structure here. We don't get a break of structure here. Boom. We finally get the break of structure right here on this candlestick, and that honestly looks like that's when the hourly broke structure as well. So that's 2 breaks of structure. Yep, broke structure, or actually broke structure. Broke structure with this candlestick, so I guess you would have gotten in a bit earlier. But still, same thing. We see break of structure, okay? We see a rally on up, okay? Maybe our first take profit is up here. Maybe you get scared because price comes up a little bit, misses your first take profit, scares you, dips down one more time into this fair value gap, filling the imbalance once again. Price rips, takes out previous liquidity, and then in turn fills the imbalance that we had within here. As you can see, imbalance gets filled. What do we get? Small reaction. Then what happens? Imbalance right here. Boom. Gets filled, break structure, rally, higher. What happens next? We target this area of liquidity. See how fluid this moves. See how fluid this is. It is boom. Liquidity sweep. Where's our break? Break of structure right here. Okay. We see the break of structure. We see price instantly go right back up. Where was the liquidity sweep? Where was the leg up prior to the break of structure? Boom. This whole candle right here. Okay. We see price. Boom. Pop its head right up in there. Ah, dude, it sucks doing this thing on a MacBook nowadays. I've been converted to gamer mode. But anyways, right, we see push up into that price range. Okay, maybe you get confirmation. What are we waiting?
I have 3 businesses that are selling on Shopify. Once I figure out that Shopify,
boom, break up right here. Okay, we wait. We wait for confirmation. What's our confirmation? A break of structure that shows market structure shift. Okay, let's say price does come all the way back down here. What are we waiting for? Boom, break up. And then, guys, you don't even have to enter off that. You can enter off another retracement. Enter off, bro. Enter off of this order block right here, or this fair value gap within here, off of a 15-minute break of structure within here, stops wherever the fuck you want, and then you can target, boom, all the way up here for crazy RR. You know what I'm saying? See what I'm saying? Okay. Let's find more examples of this. Welcome. Legiti. Welcome to... We don't get a break of structure here. Boom. We finally get the break of structure right here on this candlestick. And that honestly looks like that's when the hourly broke structure as well. So that's 2 breaks of structure. Yep, broke structure, or actually broke structure. Broke structure with this candlestick, so I guess you would have gotten in a bit earlier. But still, same thing. We see break of structure, okay? We see a rally on up, okay? Maybe our first take profit is up here. Maybe you get scared because price comes up a little bit, misses your first take profit, scares you, dips down one more time into this fair value gap, filling the imbalance once again. Price rips, takes out previous liquidity, and then in turn fills. Boom! All the way up here for crazy RR. Order block right here, or this. This fair value gap within here, off of a 15-minute break of structure within here, stops wherever the fuck you want, and then you can target, boom, all the way up here for crazy RR. On my meat, okay, put the tip back right up in, or sorry, we poke our head right back into this. Okay, right, we see boop, hourly, scale in here, boom. one. 2 shots to the dome. Okay, what do we get? Breakup structure to the downside. What can we do? Target previous areas of liquidity. Liquidity here. Liquidity here. Liquidity here. Liquidity. Breakup structure right here. Okay. We see the breakup structure. We see price instantly go right back up. Where was the liquidity sweep? Where was the leg up prior to the breakup structure? Boom. This whole candle right here. Okay. We see price. Boom. Pop its head right up in there. Ah, dude, it sucks doing this thing on a MacBook nowadays.
Alright. We've had better trades. I'm just gonna let this over now. I'm gonna go beat my meat. Just kidding. I'm gonna beat my wife. My wife, which is my penis. Eight steps to get your shit together. This guy must got it all figured out. Alright. I'm not beating my meat. I can't because I gotta lock in. Believe in Jesus Christ. Let him save you. Go repent. Oh, we're gonna come back tomorrow.